In deal news, David Faber is reporting that Charles Schwab has received antitrust approval from the DOJ for its acquisition of TD Ameritrade. David joins us right now on the Newsline. And David, good morning.
Hey, Becky. Yeah, this is a deal, of course, that you broke, if I recall, back in November. There have been some questions here in terms of the concentration of registered investment advisors, given Schwab's dominance in that area, added with TD Ameritrade's significant share of that group. But DOJ, apparently in its investigation, according to sources, did not see any sort of a violation there. And so they have given the go-ahead. Remember, they don't put a press release out. They simply take no action. But I can tell you that, of course, according to sources, it has been approved. And so this deal is well on its way to closing fairly soon.
Hey, David, watching both those stocks this morning, they're both trading higher as you're reporting this. Ameritrade up by about 3%, Schwab up by about 1.5%. What happens next? What are the next steps we should be watching for? How long do you think it'll take before these two actually are kind of tied up?
I think,
actually, TD Ameritrade now up more than 4%.
Yeah, sorry, Becky. Close is fairly close, although I haven't had to check exactly as to what their expectations are. Obviously, antitrust is the largest single hurdle in a deal like this. They did get a second request, which is typical for a deal of this size, of course, one of the largest of 2019. This was sort of seen as a key. Would there be some conditions? Would there be something that they had to do in terms of divestitures in that RIA business? That is not the case. They're both able to go forward as is with the deal with no real conditions. And expectations are they'll be able to close quite soon, although I don't have a specific on it, and perhaps since Walk on the Street, I'll have a little bit more for people.
And David, just in terms of what's happened to that business in the last few months, I mean, we've all kind of watched as Robinhood ran into some troubles, wasn't able to handle a lot of the days where there was real significant selling to the downside or to the upside. Anything else that any ways that this industry has changed since this deal was announced?
I mean, obviously volumes have gotten fairly large, as you know, volatility. There were some days certainly where there were some concerns as well. But the overriding question here in terms of consolidation in the face of 0% commissions and trading for free, of course, something you reported on a great deal when you were doing this story as well, continues to be the case. And so one certainly expects that the same conditions having been in place then are now, and therefore it's not anything that has changed in the strategic rationale for doing the deal, Becky.